All right. Good afternoon. I am on today talking about the impact of being underinsured, and the topic is still life insurance. Um,
On big thing and on pills.
Brittany who?
Uh, One of his kids' mother, he got about 10 kids.
oh, hold
Yeah, he ain't
on.
left no drive because he ain't been nowhere.
All right. I am back. Okay. So our topic today is the impact of being underinsured. Last week we talked about what you can do with your Christmas and birthday funds. And so you can go back and look at that video. It's like a little over 5 minutes. So today we're going to hit on this. So according to research, African Americans are more likely to be underinsured than white Americans. The average life insurance coverage for white Americans is estimated at 150,000, and for Black Americans, it is 50,000. So life insurance can cover unpaid debt and can be a component to help build generational wealth. All right, so we're going to look at these two scenarios. So Mary is married to John. Mary and John, they have 4 children, ages 1, 5, 11, and 17. So their assets include a house, 3 cars, and a small business. They are both employed. So Mary works part-time. She's earning $50,000 per year at this part-time job. And their mortgage balance is about $80,000, $15,000 in credit card debt, and about $8,000 on car loans. So $10,000 in savings as well. $40,000 in retirement investment accounts. So Mary is involved in a fatal accident. So we're looking at all of the debt and the potential debt. So we've added up the mortgage balance, credit card, loans balance. And then we added in, because there are 4 children, we've added in $40,000 each, which totals $120,000 in college expenses. So now we're looking at $193,000 in potential debt. So they have lost the income. The income has been lost there. And so what we want to do is look at the two options. You have Mary has $10,000, has a $10,000 whole life final expense policy, and that policy is $56 per month. Then you have Mary has a $200,000 30-year term with a $25,000 additional accidental death benefit rider. So the policy cost is about $130 per month. Now, Mary, so we're looking at the options. So she's involved in this fatal accident. Mary has $10,000 on this whole life policy. Would this be beneficial to her with $193,000 in expenses? That's what we're looking at. Would that be beneficial in having $190,000? If she had just $10,000, where would that leave her husband and family? So her husband would have to replace her income, worry about covering the debts without the income, and sending 4 children to college without Mary's help. So the $10,000 would cover the funeral for the life insurance policy, but that's about it. Now, to get another policy, Mary would look at the $200,000. We would look at the $200,000 30-year term, and it has the accidental death benefit rider. So that policy would actually pay out $225,000. Okay, so at a cost, and that's not bad, at $130 per month. So what will happen is, if the total expenses and debt are $193,000, that would most certainly be enough to cover it. Okay, but we don't know whether the 4 children, a 1-year, 5-year, 11-year, or 17-year, will actually go to college. But what we do know is we would actually have $200,000 upon her death to turn in. We would have that benefit, that death benefit. So we want to make sure, I'm just demonstrating and putting these numbers up here. This is hypothetical, has nothing to do with anyone's personal situation. This is just an example of getting just enough insurance to put you in a casket and utilizing life insurance to take care of expenses after death and taking care of and replacing that income. And that's what we want to do. We want to think generational wealth. We want to think about inheritance as we're selecting this life insurance. All right, so the insurance right here. Here is my information here, my email address. You can find me on Facebook, Instagram as well, but you can contact me for a free quote or just a consultation to assess what you already have. The information is here. So we want to try to avoid generational poverty. We want to leave loved ones memories, not debt. We want to leave them an inheritance. We want to look at replacing income, funding college for children, stop delaying funerals, and avoid having, trying to raise money, GoFundMe's and fish fries for that purpose. So this, I don't want to stay on long. This has been 6 minutes more than I wanted to be on here. And you probably can hear my chickens in the background making noises. Sorry about that. All right. Thank you for your time.